Hey everybody, my dear friends. This is Janet Hart again. And I'm always learning, I'm always growing, and I want you to grow with me. And so, you know my past. I'm a nurse, but I care for caregivers. So the most important thing for me, knowing what happens to life, we work really hard, we forget to protect ourselves. I've been given a golden opportunity and honor to learn from some of the most brilliant minds out there in the world of protection. I've been a stockbroker. I know how to read a gap and read volatility and momentum. But the world of insurance is a very, very, very classy world in which high-class advanced insurance strategies are born by the very brilliant among us. And I'm trying to take it down and understand it so that I can share it with all the doctors, nurses, nurse leaders, and professionals out there, people who are my friends. And so we're going to go through it. If I'm not perfect, that's fine. But we're going to go through it, and each day, because it is my goal, my foundational goal, to mentor caregivers, and in such a way that they become empowered, embraced. Possibly I change a life or two. I influence someone to think of, oh, hark, protection first. But what do? We investigate, just like the standard of care, just like a protocol or policy and procedure. We're going to investigate first. We're going to do a systems assessment. So for the investor, we're going to take a look at your risk tolerance. We're going to take a look at your timeline. We're going to take a look at everything. As a fiduciary, it matters because I'm not putting in what I would want. I'm putting in what you want and you need, not only for you, for your family, for your business practice. If you're a doctor just starting out, by golly, are you going to need protection for growth? Sometimes they're going to even demand it in your practice for you to have that relevant protection. Just like for your car policy, you're going to require an insurance policy before you drive, get on the highway. Same thing when you practice medicine, same kind of thing. You're starting a family, you buy a house, let's say you get sick. Who's going to pay for the mortgage? We need protection in all of those situations. So let's get started. And the most important thing is protecting your life's work. So probably going forward, this would be much better to do with visuals, but I'm going to do it just by talking today. And hopefully, whatever questions you have, you can bring them back to me. I will run little sessions where I get people together who are very, very interested in this, to go over things visually, to go over the living balance sheet, to go over probably Guardian's products, which is the protecting one's life in a whole life policy or a disability policy. But I'm going to give a disclaimer that today this is for educational purposes only, and you're here as part of my learning experience that we're going to all learn together. So thank you. So again, what is the title here? The Power of Whole Life Insurance for the Practicing Physician, Nurse Leader. Let's step it up a little bit and let's move on. Okay, so starting with the goal in mind. What is your goal? Well, it's to help you protect the life that you're building, the patients you serve, and the family that you love. Period. Plain and simple. So tell me that you've just graduated from medical school. Tell me that you've got debt. Oh yeah. But tell me that it's time to start building a practice. And you have to have expenses as you start anyway. But protection comes first. So the physician's income is high, as I said, but wealth will be delayed due to your debt. So many will start a practice with this medical school debt and business responsibility. You will have irregular hospital schedules and demanding hours and high liability exposure because you've got patients and patients get sick and stuff happens. So we're going to match all that with the creation of your lovely new family, a new home with a mortgage, and mounting expenses. They don't end, they continue. So it requires, my friend, a well thought out protection and safety for that beautiful family and for the practice that you are so proud of. And I'm proud of you. So bravo to you. So what is the whole life policy and why does it fit you, the physician or the nurse or the anesthesiologist? So what does this whole life provide? It provides a guaranteed death benefit for a lifetime of protection. Bravo. A guaranteed cash value that grows over time. Amazing. That is tax deferred and not tied to the stock market. So dividends are not guaranteed, but at Guardian, dividends have been paid for the past 150 years. So we pay in, we get back, we grow value, both in a cash and a death benefit. And there's loan availability. So we have access to the cash we build for business expenses, retirement income, whatever. The advantages go on and on. So why the physician? Why the anesthesiologist? Why the dentist? Why now? Why? Because you've got new lives you're responsible for. Not only you, your family, and your business and your patients. You need to protect your assets. You need to make sure you have creditor protection. And this is crucial for high liability professions such as the physician. You're going to have practice continuity, key person coverage, or buy and sell funding in group practices. You look at tax-advantaged retirement supplementation via policy loans or withdrawals. You want to have tax-efficient wealth transfer. Well, for legacy planning for your family or charitable giving, which may be down the road a bit, but it's good to think about. And we're going to add to that policy, perhaps, a disability and waiver rider to ensure the policy stays in force if you cannot work. So what are the living benefits to a whole life policy? Well, let's give an example for everyone here. So let's assume that Dr. Smith or Dr. Jones is 38 and he invests $1,500 per month into his whole life. By age 65, the projected cash value is approximately $1.1 million, assuming the current dividend scale. So he can use this for college funding, for practice expansion, or for retirement income while the death benefit continues. Amazing. And we grow this over time without worrying about it. We just leave it there and allow it to accumulate. So this is absolutely amazing. We're going to address some of the myths around whole life. We look at market volatility, which doesn't exist in a whole life, versus a whole life guarantee. It's not an either or. Whole life fits into a diversified plan or portfolio. It's flexible. You can get paid up additions and you can get policy loans. So let's take a look at, some common policy riders that are chosen by physicians. The first one is called paid up additions. So this is optional, and it is what we call a cash value accelerator. It's favored among physicians who desire strong long-term growth and larger future income potential, increasing the death benefit over time while keeping guarantees of the whole life intact. It allows you to purchase additional fully paid up mini policies inside of your main policy over time by paying extra premium into the PUA rider, where each payment buys a small paid up addition, which immediately increases death benefit, cash value, and makes you eligible for dividends and flexible increases over time. Adding PUA regularly, monthly, annually, or lump sum. Of course, it is subject to policy limits and IRS MEC rules. What are the advantages of the paid-up additions? It accelerates the cash value, so it boosts your policy internal cash accumulation faster than with a base premium. It provides high dividend potential and death benefit growth. So what are the considerations? It requires extra premium. You must stay within the IRS modified endowment contract limits, the MEC, to preserve the tax advantages. It provides liquidity, while cash value is accessible via policy loans or withdrawals. Here, CUE. Rescue the death benefit and may incur interest and available and limits guardians set maximal amount of PUA based on the policy size. So the example here is, again, the doctor with $1 million guaranteed whole life elects the PUA rider and contributes $5,000 extra each year. Each payment buys immediate, fully paid up mini policies. After 10 years, the death benefit and cash value are significantly higher, all remaining tax deferred and eligible for dividends. So finally, a waiver of premium is an optional add-on to the life insurance, which protects the policy if you become totally disabled and cannot work. It is what we call a built-in disability safety net. And the guarantees remain fully funded and grow even if you're disabled and the income stops. How it works and how it's triggered. You meet the definition of totally disabled if you're unable to perform your regular occupation for a set period, like 6 months. The rider activates. The premiums are paid for you, and Guardian will pay the entire scheduled premium on your behalf for as long as you remain disabled, keeping the policy in force. Cash value and dividends continue. The policy cash value growth, dividends, and death benefit continue as though you're still paying. The advantages of this policy protection are absolutely amazing and immense. It ensures your coverage will not lapse during a period of disability. It preserves your cash value, and there's no repayment. The details, the costs, it adds a modest extra premium to the base. Eligibility, it goes under underwriting when you apply, and there's a 6-month waiting period. Our example here, Dr. Lee, age 40, has a Guardian whole life with a waiver of premium rider of $1 million. Has a 1 million. Here. Has a 1 million Guardian whole life policy. We're with it. Okay, at 48, so if he buys it at 40, at 48, he suffers a serious illness and cannot practice. After 6 months, Guardian pays all future premiums, possibly tens of thousands of dollars over time. Dr. Lee's cash value and death benefit continue to grow as if he never missed a payment. Amazing. So a term blend rider, another interesting one. This is an optional add-on to lower the cost of insurance, combining permanent whole life with term. Lower cost insurance, okay, term insurance with permanent whole life within one contract. Cost-effective way to start with high coverage while building permanent whole life. It's blended coverage. Policy starts with a base of whole life plus a layer of term. So instead of buying $1 million of whole life outright, you might buy $250 of whole life and $750 of term. So it's called a gradual conversion. As you pay premiums and policy cash value grows, portions of your term can convert to additional whole life. Brilliant. What are the advantages? You're going to lower your initial premiums, letting you start with larger total death benefit for less coverage. Brilliant. Flexible. You can reduce and or drop the term portion as your income grows and cash value grows. It's efficient as dividends and paid up dividends. Here, only one. Whoop. Only one. Unpaid up additions can gradually replace the term with permanent coverage. So what are the considerations? Premium changes, whole life base is level. Rider term cost can rise if you keep a large term portion for years. Underwriting, you must qualify medically for the combined death benefit. It's not a standalone term. If you cancel the base, the term expires or ends. So here are example. The 35-year-old surgeon wants $1 million protection, but you only can budget, or he can only budget, he or she can only protection, but he or she can only budget for $350 of whole life. What is our solution? Purchase $350 of whole life, $650 of term, blend rider over 15 years, the dividends and paid up additions can replace much of the term. Solution with permanent whole life and keep the premiums manageable. Brilliant, 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 brilliant. Okay, so summarizing, we get this beautiful whole life policy, we fill the basket, and we add some riders to keep that policy full, robust, but we learn to measure our cost because we're just starting out and we're a doctor with lots of expenses and lots of risk. So the summary of the riders that you may find interesting are paid up additions, waiver of premium, and a term blend rider as well. So the implementation, again, just like when we do a surgical plan, how many times has the surgeon done the procedure? How many times has someone implemented the plan? So luckily at Guardian, we have a division called BRC, Business Implementation Team, Business Resource Group, who are phenomenal. I don't pass anything not through the experts. Everything is passed through an expert. So there's a tiered command of implementing these policies. So we make sure that, just like blood, hanging blood, we have a 2-person sign-off, or like in the olden days, insulin or any kind of drug, chemotherapeutic drug, anything I do, I'm going to double check. So to implement, first of all, it's going to be your risk tolerance, First of all, it's going to be your timeline, your family, your house expenses, your business expenses. Please don't not be covered. Please be covered. So I care for the caregiver. That's why I'm here today. And that's why I'm teaching you. I'm teaching me. We're all learning this together. And we'll all master it. And you'll be safe. And one story will come, and then another story will come. And I can tell you many people come, oh my God, Jan, we just did this. And now I had this situation. So to implement, we do a needs analysis. Each physician must analyze their practice, their lifestyle, their goals. Another needs analysis. Each physician must analyze their life, their disability, and their practice obligations. Needs analysis. Each physician, their policy is individualized, and the premium riders, waivers of premium, paid up additions. I can tell you about them, but only you can make that final decision. And then the implementation requires underwriting. So nothing is for certain. We try it, we write it up, and we see if you apply and you pass the muster, so to speak. So it involves underwriting, delivery, which is seamless, physician-friendly, and the intent is for long-term protection. So planning, personal income replacement, key person, or practice overhead coverage, legacy planning, or charitable giving, gift giving. So now that I've taken you here and we've reviewed a little bit more, and every day we take baby steps, but we're getting into real protection here. So we've only hit the tip of the iceberg, which is whole life. If you're interested, let's schedule a confidential review to see how whole life can fit your personal and practice goals. If you have more questions, please look me up. Please send a text. Please give me a call or an email. I'm here. Thank you. Have a great day. Jan Attard.